Hello, everybody. Thank you for tuning in. I am Mark, the stock market jobber. I'm here to help you learn how to not lose money. And when you're trading, guess what? If you're not losing money, you're actually making money. So there's some interesting signals going on here now with the Qs, and they're kind of reminiscent to what was going on in December of 21. And if you remember, or even if you don't have to worry because I'm going to show you, it was a sign that the market was kind of coming apart. It was an early sign. And I think that's what's going on now. What we have now is the market is falling apart. Financials. All right, you know what? I was just going to show you the cues, but now I got to show you this because you got me into it. Blah, blah, blah. Let's talk about how to make money in a down market. Look at the financial sector, okay? You don't need to be a former hedge fund trader, you know, like I am or was. And believe me, it's not that big of a deal. There's plenty of former hedge fund traders that are idiots. But anyway, financials, meltdown, healthcare, meltdown. Wow, look at that. And look at how it found support right there. Markets find support at levels that were resistance. People sold here, and when the market goes higher, they're like, I made a mistake. If it gets back to my level, I'm going to buy it back. Remorseful sellers placing buy orders can turn resistance into support. So the market is really kind of falling apart, all right? And the S&P isn't really moving because there's a couple things propping it up. And the two most important things to watch now are NVDA, which is so freaking overbought that it's, I would mortgage my house. Well, I mean, no one has, but I don't know, I would bet a lot of money that this is going to turn. Okay. Forget future prospects, forget AI this, forget earnings that, forget sell this. When the market doesn't have anyone else to buy, when everyone who wants to buy NVIDIA buys it, it's over. It's not, it can't go up. You want to know how you know it's over? All right. Next time you go out to dinner or to a bar or anywhere, and someone starts telling you about the NVIDIA stock they bought and they're not someone who typically buys stocks, well, that's time to sell. Because when people that don't buy stocks start buying them, it's the end of the food chain. So let's go to the Qs. And this is what I want to show you, which is really interesting. All right. So this is the Q where every stock has the same weighting. Qs is the Nasdaq 100. It's the 100 biggest stocks in the Nasdaq that isn't financials. This thing went into a free, you can't even see it. It went into a free fall. This is where it was today. Okay. Now let's look at the Qs. That's the market weighted or capitalization weighted. In this one, the bigger the company, the more important it is. In other words, NVIDIA, Apple, Microsoft, they're, it's a 100 stock index. Those three stocks are probably 20, 25% of this. So money could be coming out of most of them, like we just saw, and going into these big guys, and it masks the underlying weakness. All right. It's the way the index is constructed. There's 100 stocks. 80 might be going down. 10 or 15 might not be moving. If the money is flowing into those top ones that dominate it, that are 25% on a chart, it's going to go higher. And if this is what you're invested in, that's great. But I would just say that if we look at this, it shows the market is really starting to fall apart. Okay. Now, here's what I'm going to do. I'm going to go back to the last time we had a major market peak, and it was back in the end of 2021. All right. What, 2.5, 3 years ago? Sorry. I read charts. I don't, I can't do math in my head like I used to be able to. But anyway, so check this out. So this is the equal weighted one. Okay. This thing started to fall apart in November of 21. All right. Again, you don't need to be a freaking chart guru or a former hedge fund trader to see, wow, that broke its uptrend. It's going down now. It was going up. Now it's going down. That's all trading needs to be. People make it so freaking complicated. All right. So now let's look at the market capitalization weighted one, the Qs. Remember, this peaked in November. It started to fall apart. This was a sign the market was falling apart. All right. And now you students who are in my Benzinga class, a lot of you made a lot of money in this period here, and it's so awesome, and I really appreciate it. But anyway, we could have another thing going on like that now. Now let's check out the market capitalization weighted index for the same period. Okay. Where did this peak? In late December. So the equal weighted ETF told us most stocks were going down. Okay. Some of the big boys were going up, but that's because people are getting worried. They're selling their small stocks and they're like, oh, what's safer than Apple? What's safer than an NVIDIA? What's safer than Microsoft? Let me go jump in there. It's like a flight to safety. And that's what's going on now. All right. So the market is falling apart. We had a massive move down in the bond market yesterday. Oil is breaking out, going up. There's a lot to be bearish. So what are we going to do? Are we going to go put our heads in the sand and be like, yeah, whatever? We're going to go have a couple afternoon cocktails and watch Walker, Texas Ranger? I mean, that's probably what I would do. But anyway, that's another story. But let's take a look at the bond market. All right. Remember, bonds go down, interest rates go up. Bonds going down is bad for stocks. Look at this, everybody. I mean, this is like in a freaking free fall here. You know, bonds don't trade like this. This is not a biotech stock. All right. You know, we got this really negative action. It's like the market is in such a precarious state. Microsoft is testing this important 430 level, rolling off of it. NVDA, way everybody. So this brings us back to what I was talking about in the Qs. The QQQE and the QQQ, it's hard to kind of say. If they start to diverge in a situation like this, it's bearish for the markets. So what can you do? All right, well, let's talk about another Q. QQQ, QQQQ. It's like that. It's like I am the walrus. Cuckoo, cuckoo. Now, if the market starts to fall apart, and I suspect it will, this is where you want to be. This is the Qs that trades inversely to the market. In other words, if the Qs are down 1%, this will be up 3%. It's leveraged and it's short. So as a retail trader, if you're listening to me right now, you can get exposure to, you can make money when markets go down, and you can get leverage. You know, you could go tell all your friends when you're playing golf this weekend. It's like, oh, you know, I just hit that stock into the wood, or hit that ball into the woods. I hit that ball into the woods. But guess what? My portfolio was up 30%. What has yours done? All right. There are always ways to make money in the market. And in my opinion, it's easier to make money when the market goes down because it goes down faster than it goes up. So anyway, so this is going to be a good place to be. Make sure you check back in. Make sure you subscribe. Make sure you ask for the notifications. Please, join our membership. Tell everyone. There's going to be some really good opportunities to be made over the real good money to be made over the next couple weeks here, and it's going to be on the short side, in my opinion. All right. So anyway, that's it, everybody. Thank you so much, and I hope to see you soon.